Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Sunayna Tuteja, Head of Digital Assets at TD Ameritrade, to discuss increasing collaboration between capital markets and cryptocurrency. Sunayna, it's great to see you as always. Welcome back to Trade Talks, and this is a perfect time for you to join us. I mean, it's been quite an incredible couple of months for cryptocurrency in general. And let's talk about that delta between the novelty and normality closing quite rapidly.
Yeah, absolutely. Thanks for having me, Jill. And you always have really good timing. Every time you had me on, Bitcoin's done something spectacular just in days prior to it. So, gives us a good opportunity to nerd out. I think, the rally we've kind of seen in terms of Bitcoin, not just over the last few months, but, it seems like eternity ago. But if you rewind back to the start of the year in early 2020 and the way Bitcoin kind of started, and then along with everything else in the world that was stress tested, Bitcoin being part of it. But I think what's astounding as folks who are kind of, in this arena is how Bitcoin has kind of emerged, throughout the year to now, setting an all-time high of over 20,000. So, I think that journey is been really important, I would say, from a psychological perspective for a lot of investors in this community, but I think also for a lot of folks that are building in the crypto ecosystem, operating in it like we are, and obviously from our clients' lens of kind of the RIAs and the individual investor. And to your point, I think for me, as an operator and observer and serving our clients, what's kind of gratifying and validating in terms of the current run is, as you said, and we see this with the adoption of any technology, right? The delta between something being a novelty to necessity kind of closes rapidly. And that notion of, oh yeah, this is just something nice to have versus, whoa, this is something neat to have. And we've really seen Bitcoin kind of come into its own this year, obviously driven by a confluence of macro factors. But I think the two things from the client lens is, one, just, the utility. Forever the narrative around Bitcoin was, well, why should I have it? How do I use it? What is it good for? And in 2020, that narrative has really crystallized around that notion of, this is your version of digital gold. It's a new store of value. It's a hedge against inflation. And, that's really kind of been catalyzed. And I think then the second, or in addition to the utility, is the ubiquity. Just think of the Cambrian explosion of on-ramps and instruments that have made it really easy for market participants to engage with this asset class this year, and also how it's seeping into our lifestyle when you have credit card companies announcing that in the next few months, in addition to earning cashback or airline points, you can now earn Bitcoin or fractional Bitcoin like Satoshis for your purchases. And those moves are important because we all understand that experience, and it really embeds this notion of digital assets more and more into our day-to-day lifestyle.
And the question I'm sure you get all the time is this similar to 2017? And I would argue that it's not, because we have seen the institutional investment come on board. So, Sunayna, this is the point that we mentioned in the beginning, bringing Wall Street to Main Street and marrying the capital markets to digital assets.
Yeah, if I had a Bitcoin every time I was asked the question over the last few weeks about what's different between the 2020 rally versus the 2017 rally, I'd be even happier. One of the things that I see from, again, the lens of serving clients is 2017, the activity was very much driven by speculation and trading, right? People kind of coming in and out of that Bitcoin trade. In 2020, the mental model is significantly different, where the attitude and the participants are more coming into it more from the mindset of investing. And that difference between trading and investing is huge, because it's giving rise to this new wave of, as we like to call, hodlers in the Bitcoin community, or people who want to kind of buy and hold for the long term. And that really changes the dynamics of the ecosystem and the volatility and the price moves and everything that we've seen. So I think that's important. And, from an institutional perspective, you're right. One of the reasons TD Ameritrade leaned into digital assets early on is because we always saw this as a logical next step in the ethos of bringing Wall Street to Main Street. Now with Bitcoin, it's a bit of a twist, because as much as you're bringing the health and hygiene of capital markets into crypto markets, you're really taking a Main Street product, which was created from the ground up, to Wall Street. And it's been really, again, validating to see well-known marquee institutions, whether they're individuals like PTJ or Bill Miller, or institutions like insurance companies like Mass Mutual and others, really kind of make a bet and enter this ecosystem. I think that bodes well for the strength and sustainability of this ecosystem.
Now, Sunayna, I think this is really interesting. You call Bitcoin a big tent, and you're looking at the inclusivity of it. This is the first time I've heard someone bring that into the conversation.
Yeah, this is the signal that's near and dear to me, and something I've watched for very keenly over the years. And I think it's really kind of blossomed in 2020. And what I really mean about that Bitcoin big tent effect is, Bitcoin really stands out as this asset class that is, again, when done right, and again, this is the power of education, because you want to make it inviting, not intimidating, that if you look at the DNA of the market participants who are engaging with this asset class, just the diversity is astounding. You've got institutions, you've got individuals of all stripes. But I think the other way I also look at the big tent is from a talent perspective. As enamoring as it is for us to be tracking capital inflows and price moves, if you ever want to see the longevity of a product or a technology or a company, I believe in the phrase of follow the talent. And I look at the inflow of, really wicked, smart, talented people, whether it's from technology or finance or, the supporting roles like communication and accounting, taxation, all now starting to come into this ecosystem because, this is where they want to work. And I think, again, that bodes really well for this ecosystem. The comment I was making to a couple colleagues the other day is, in 2017, if you were somebody who was really, evangelizing a Bitcoin within your organization, you were really taking a significant career risk, right? And in 2020, that career risk in some ways is completely inverted, because now if you're working at an institution of any size, be it in finance or technology or even in government, if you don't have a sound understanding of Bitcoin and a clear opinion, about the utility and the importance of this asset class, the career risk is now on you. So, and that's really cool to see. And I've always believed that, if you want to see how a certain product is going to grow or a company is going to succeed for the long term in the future, you look at the talent and just, again, people who are quitting their very well-established jobs and careers and really kind of coming into the Bitcoin ecosystem to build, to operate, to invest, I think, is a very strong positive signal for the ecosystem.
Yeah, I'm definitely going to do some more work on that, Sunayna. It's always great to catch up with you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill. Happy holidays to all.